how much higher would you say that the interest rate is than the traditional 30-year A+ type of client? Is it like 2 percentage points, 4 percentage points? What would you say in regards to that?
Yeah, and that's a good question, because some of the things that I'd like to clarify when I speak to a borrower who's interested in these loans, and I'd like to have that consultation, right, and kind of walk them through the process, walk them through the expectations of what they're going to come across. Yes, it is more expensive, right? Interest rates, and we'll get on that in a second. Down payments also a little bit larger. The main difference is these loans are, if we can get into the weeds a little bit, but these loans are not insured by Fannie Mae, Freddie Mac. So these are more portfolio products that these lenders do offer, right? So it is, like you said, they're providing a return to their investment group on what those returns are. But a lot of times, the first question I always get is, oh, can I do an FHA loan? Can I do a 3.5% down? Am I going to get that 3.5% rate that I see on TV right now? And that's not the case, right? It's just I'm always very upfront with people and tell them, the rates vary depending on the amount of down payment, your credit score. And that's another kind of a weird factor, because, a misconception as well, that people can't have a credit score with an ITIN. Like you said, you've come across it in the check cashing business, but they can go get a car, they can have credit cards, and there is a credit profile established. So we do need, the higher the credit score, like your typical loan, better interest rates. But you are going to see interest rates north of, right now in this market, I'd probably say north of 6%. So it is more expensive than your traditional loan, which you can probably get for 3.5%, 4%. So we're looking in the 6 to 6.5, and maybe even higher, depending on credit score and how much down payment you are willing to put into the transaction.
Yeah. So essentially, it's a product that is meant to help a certain amount of people. Now, what's the minimum down payment like? I know that obviously you touched on the fact that it's not 3.5%. You can't buy a property with 0% down payment. What would be the minimum requirement in that? And obviously, I would imagine that it depends on the credit score. It depends on the credit score. So, but what, as a general rule, what would you say that is?
As a general rule, I always tell people, be prepared for 15%. I've done it with 10%. It was a top tier client within the ITIN space. Good credit score. Good job history, and had a lot of other compensating factors to show for me to be able to sell that to the investment group. But always be prepared for at least 15%. Okay.
So 15%, let's say on a $500,000 home, is roughly about $75,000. 10% is roughly about $50,000. And I simplify it just because, I talk to people all the time that are like, I tell them 10%. What does that come out to? And it's just kind of have an idea.